good morning, good afternoon, and good evening to all. Myself, Vaibhav. In today's session of automated trading, we are continuing to work with Williams and the historical candles. This is the third part of the ongoing series where we are utilizing this Williams indicator along with ATR. I hope you are now well familiar with the functionality of both these indicators. So straight away, let's go to the standard disclaimer. Here, this is simply a reminder that this session is purely for the tutorial purpose and no claim is being made regarding the profitability or otherwise of the algorithms which we will be developing during this session. Suppose if you want to use any of it, I would suggest that you do extensive trial runs and also allow it to run for the sufficient enough time on the demo accounts to get an idea of the efficiency of the algorithms. And nothing in the webinar is to be constructed as an advice to trade or for any particular setup. Now let's get to the work. First of all, we will take a look on the framing of the algorithm on the chart. So here, what we are trying to achieve is we are looking for a buy trade when the Williams R has been in a oversold territory for a extended period of time. So the minimum condition is that we want it to have been in oversold territory, that is a reading below -70 for at least a day, and similarly for a sell trade we are looking at the overbought condition for at least a day. On top of that, we are also looking at the movement in the recent past, and here for that we are utilizing the last candle which should have been closed in green, that is with gains, and the prior four candles should have been closed in red with the price move dropping more than 100% of the ATR, and just inverse fashion for the sell trade where the last not last the penultimate candle and the three candles prior to that should have closed with gains, and then the last candle should have closed in red. What it will mean that the underlying instrument has been in overbought or oversold territory for at least a day, and even after that there has been a up move or the down move, that is extended move, and it is even in the volatility terms it is more than its days range, and now this is just the start of the reversal. So that is why we are looking at the last candle close, and only when we see that some selling pressure is coming in we will be moving in and try to see if there is any trading possibility for us to exploit, and then we will be utilizing the dynamic stop loss and the target range using the ATR range, and so we won't be going in for a static combination. We will keep it dynamic, so whenever the ATR, the average true range, the underlying volatility will of that instrument will change, we will factor in as and when it happens, and our algorithm will trade accordingly. This is the visual J forex setup so far. We have completed the buy side in yesterday's session. We were just to add the market open order and define the stop loss and the target. Here this is the standard instrument subscription. The position amount has been defined at 0. The Williams R indicator, shift 1 and the shift 6. Then we got these 5 historical candles, shift 1 to shift 5. All are to be checked in for the necessary price moves, which are preconditions for our algorithm to trade. Then the ATR, we have done also the difference calculation here. As I said, we want the price move to have been more than the average daily range, and for that we are checking in the difference between the candle close, and we have defined it as well. And then for immediate order execution we will be simply checking in that whenever the price will start to rise above our defined parameter, it will go in for a buy trade, and when the price starts to fall it will go in for a sell trade. So it's pretty simple. Then this is the ATR range, and here We have simply done this 10% of the ATR, and which we will be deducting from the last candle's closing in case of a buy trade, and we will be adding it to the candle close for a sell trade. So here these are if condition blocks. We are comparing the candle closing and the candle opening price to uh, ensure the condition that last candle should have closed in green, that is with gains, and the prior four candles to that should have been in selling territory with continuous losses. Then comes the Williams range, Williams R percentage. Here, the shift 1 and the shift 6, both the times the value should have been in oversold territory, that is below -70. Then comes the difference, and then this price move beyond our defined price range. So this if block is not needed. I had just connected it to keep track of this condition. So we will now connect it to the market open. We will complete it open at market, and then we will move on to, so the candle close should have been below the buy execution price. So we connect it to the open at market. So all good. Now let us go back to defining the buy and sorry, the stop loss and the target price. So we will see what kind of calculations we have done so far. Now we will need to add two more calculation expressions. I think yesterday we had got those blocks, so we will simply line them up. We have here, and we will need to do type conversion as well. So the instrument we are using is Euro USD. That will mean that we will multiply the result of the calculation by the value of 10,000 for zeros to get the decimal factor cancelled, and do the type conversion. Those who are familiar with programming in Java, they will be able to easily understand the type conversion. And those who have not worked in Java setup, it's pretty simple. It's not something too difficult to understand. So here we have done this. This is the line 22 is the ATR, and the ATR 30 is 30% of the ATR, and ATR 75, these variables is there to define the 75% of the ATR range. We will be multiplying the ATR by 0.30 and 0.75. So that's it. And then we will need to create one more variable, as I said, to get the decimal points cancelled and do the conversion and get it in the pips. So we need 4 zeros, and oh sorry, first we need to type in the name. Start value should be 10,000, and here we will name it as the pip conversion PC, or type conversion TC, anything will do. Type conversion for pips we can, okay, TC, let it be. So we get this here and done. So I will explain to you once more why we are multiplying by the 10,000. So see here, this pips, the last, this 59 pips. So this is the, if we simply take this is 9, if we add 1 pips, it will become 60. So the value will be 1.0960. Now, if we want to get it in integer, we need to get these decimal points cancelled. So for that, we are multiplying with the power of 10 to 3 or 4. I am not that strong in the mathematics. I will simply tell you the numerical number, that is 10,000. So we will convert this double into the integer type, and that is the basic reason behind the 10,000 numbers which we are utilizing. I hope you got the point. And if not, then I think you will need to get a bit familiar with the Java, the type conversion between different data types. So here we are. Now, the trade amount, we can fix it at 0.1. All right. And I think even we can do one more thing. We can even keep different lot sizes, different amount depending on the volatility. Suppose if the volatility is higher, you can keep the lot size less. So we can utilize even multiple open at market and then keep a precondition of the ATR. So the first the ATR will be checked, and depending on the ATR values and our decided parameters, the order will go through different open market block, and then the order will be executed. So we reduce this slippage to 2 pips, and now comes the stop loss and the take profit thing. The stop loss, we will create a parameter, variable here, and it will be stop loss pips SLP. Okay, and this one also be, I think TPP should be fine. TPP. Okay, so now we got the values. So that's it, and we put it here. These are integer types, and now the results will be taken into integer types. Okay, so we go back, and we are almost done with the buy side. Now we will need to work with the sell side. So this is the buy side. Only thing which we can do here is do some twist and turns, and even we can try the pending open. Here in this case, the time frame for the order execution will be 4 hours, as we have defined that the last candle should have closed with gains and the prior 4 candles should have closed with losses. So that will mean whenever the last candle last candle's close was green, and then the current candle, whenever it will close, we will see that our necessary requirements won't be there. So after 4 hours, the trading conditions would have changed and no trading will happen. So it's kind of making sure that only during the first 4 hours the trade execution will happen. Now we needed to do A1 into A2 into A3. Again we do the same, A1 into A2 into A3. Alright, we got it. We connect these blocks now. And let's start working with the sell side. I don't know if we will be able to cover the sell side in today's trading session, maybe some extent. And if we are fortunate enough, then we might even be able to do the test on today itself. Or else there is always a tomorrow. So let's get back to the work. We will need to define some sell entry points. Not some, only one sell entry point. So first let us define the sell entry point and then we will start adding the if conditions. So first we do that calculation, we take the calculation expression. We have got this, okay. And now we will need to go back on chart to help us understand better when the sell trade will actually happen. So let me check just roughly if I am able to find any recent example where we can fit in our condition. Here you can see that 4 candles have closed in green with gains, but what happens, this is the range is not more than the ATR, so no trade will happen. We will need extended move on the upside, and even prior to that the instrument should have been in a overbought territory. So here we got that conditions. So here you can see that this last candle has closed in red and prior candles with gains. So here the almost all the conditions are fulfilled for us. 17 GMT. What was the time? Time was 17 GMT of the 9th March. Okay. And even prior to that, yes, Williams R conditions are also fulfilled. So the trading would have happened here, and we would have needed to add 10% of the ATR. So whatever is the ATR, we would have added 10% of it to this candle's closing price. So the order would have gone somewhere here. I'm not precise. And then whenever it would have started falling, as we are using 10 seconds candles, the last and the penultimate candle, and then we will see whenever the price starts to fall below our desired price range, the order will be executed. So somewhere here the order would have got executed. Then we are defining the 30% of the ATR, and I hope we would not have hit a stop loss. We can't be sure. I think we'll need to do the test run, but as far as I see, the range is not that big that our order would have got executed. Still, let's assume for the time being that the stop loss would not have been hit, then we would have made 75% of the ATR range, and these days the ATR is kind of elevated, so I think we would have made somewhere close to 100 pips or just a little less than that. If the ATR was of 150 pips, we would have of course made more than 100 pips. So that's the requirement for our trading. Now let us go back on our Visual GeoForex platform. So here we define the sell execution price SEP, and for that we would need the last candle's close, and then the 10% of the ATR needs to be added. So we check on the candle with shift 1, and candle 17 is the last candle. We now need candle 17's closing price. So here we look for the candle's closing price users variable, and we got auto created, right? And here comes the candle 17th closing price. Okay, all right, we got it. Now we add the 10% of the ATR. The 10%, where is the 10%? Uh, ATR 10 is the 10% and it is somewhere here. Let us be sure about the value as well. Yes, 0.1. I shouldn't be so doubtful, but then we need to be pretty sure. Okay, we do the addition A1 plus A2 and we get the result, which will be the sale execution price SAP. Alright, we have saved it. Now we start adding okay, SCP is there. Now we need to embark on getting the mission of cell site completed. First of all, we want to check on the Williams-R condition. The last candle's Williams-R value should have been more than, so here more than -30. So it can be anything between -30 to 0, -7, -15, -25, all things are covered. Okay, so we get that Williams R. We take in more if blocks. We are going to need plenty of if blocks, so let us take 2, 3 straight away. And we take another Williams R of the shift 6 and we define Williams R 15. It is going to be compared to -30 and this one also -30. And here we want the value to have been greater than -30. Okay, first input greater than the second input. Alright, now we need to check for the candle's closing prices. So we start looking for the historical candles closing levels. Let us start with the last candle's close. So we take first thing first, candle 17, and we go into the auto created variables, candle close, candle 17. Okay, so the candle 17's close should have been less than the candle 17's open. So that is the requirement. We take it, we take few more blocks. Oops, what happened? Oh, what happened? No. Internet is all fine, but the block is not coming. Yes. it. Okay, so now I think we won't be able to cover the whole setup. What we will do, we will cover the remaining setup tomorrow, and we will also try to make the market open order dynamic. In case of lot size, we will add a few ATR conditions, and then we will keep different lot size amount. We can use 3-4 different market open conditions as well. So we can try it tomorrow. Now what we needed was that the candle close should have been less than the candle open for the last candle. Okay, yes, now we look for the candle 18th open and the closing levels. So we go into the candle 18th opening closing levels. We want the candle close to have been more than the candle open. Okay, so the candle close should have been more than the candle open levels. Similar thing we will need to do for all 5 candles. We will be looking at the closing and the opening levels. We wanted candle close to have been more than the candle open. Alright, so again we look for, first let us add this, no, we will first take one more if condition and then we will connect it. Okay, so here we go. We now look for the candle 19's opening and closing levels. Again the candle 19's close should have been higher than the candle open. Alright, so this is shift 3 candle. Candle's closing should have been greater than the candle open price. Okay, so today we will wrap up the session, and then tomorrow we will do some changes in the buy side as well. We want to trade as per the volatility, so we will define the pips. So suppose if you want the lot size to be lot more when the ATR say 50 pips, and if it rises to 100 pips, then you want the lot size to be bit less. And suppose if it wants suppose if the volatility rises even beyond 150 pips or say 200 pips, you want the lot size to be even less. So we will factor in those conditions, and then we will look for the ways to make things dynamic. We can do that changes as well. So here only we will try the setup, and we have already made the target price and the stop loss dynamic. So even lot size can be done with dynamic. So I think we have not tried that thing so far in our session, so we will tomorrow we will just look into that possibility as well, and then we will do the test run. We are kind of halfway done with the sell side as well, and we will need to finish the sell side and then bit of changes to the buy side, and we will be good to do the test run. So that's it from my side for today's trading session of this automated trading series. And okay, so here we are doing this adjustment for the aesthetic purposes. It should not only work well, it should also look well. So on that note, we wrap up the session. I will be back tomorrow for further developments and of course further optimization. Thank you all for joining in. Have an excellent time ahead. Make a lot of money. See you tomorrow. Goodbye.